Hi friends, welcome to the accountancy class. Today we are going to study the term issue of shares for consideration other than cash. The company purchases certain assets from vendors or sellers or suppliers on credit. Instead of making the payment to vendors in cash, the company issued them certain agreed number of shares at the agreed rate as a consideration payment in exchange of assets purchased. Shares may be issued to vendors at par or at premium. The requisite journal entry to be passed is as under. The company can make the payment by issuing shares at par or at premium. First, we have to write the pass the journal entry for assets purchased. The entry will be assets account debtor or sundry assets account debtor or vehicle account debtor to vendor's account, being purchase of assets on credit. Then second step, pass the journal entry for make the payment to vendor. A company can issue shares or make the payment by issuing shares at par or at a premium. When shares are issued at par, the entry will be vendor's account debtor to share capital account. For passing this journal entry, first we have to pass the number of calculate the number of shares to be issued to the vendor. For that purpose, one equation will be applied, that is now the amount payable divided by face value. Here the amount, for example, the amount payable to vendor equal to 6 lakh rupees, face value of the share equal to 100. The number of the shares issued will be 600 shares, that is 6 lakh divided by 100 rupees. Then the amount transferred to vendor's account will be number of shares issued into face value. When shares are issued at premium, the entry will be vendor's account debtor to capital. Capital may be equity share capital or preference share capital to securities premium. The amount transferred to vendor's account will be number of shares issued into issue price. Here the issue price is including premium. It may be 120 rupees. Then to share capital. In all cases, the amount transferred to share capital equal to number of shares issued into nominal value or face value. Then to securities premium, the amount transferred is number of shares issued into securities premium amount. The equation for calculating the number of shares issued at premium is the amount payable to the vendor divided by issue price. Sometimes the issue price may be 120 rupees, 130 rupees, etc. In all cases, the amount payable divided by issue price. Then you will get the number of shares issued. Now we are going to solve one problem. Amrit Limited company purchased a machine worth rupees 1,15,000 from Indian traders. Payment was made to rupees 10,000 by cross-checked and remaining amount by issue of equity shares of the face value of 10 each, fully paid at an issue price of 10.50 each. Make entries in the book of the company. Now we are going to pass the necessary journal entries in the book of the company. Here, the purchase price of the machine is 1,15,000. Out of 1,15,000, company make the payment of 10,000 to vendors. The balance amount to be payable to vendor is 1,05,000. So first we want to pass the journal entry for machinery purchased. Then company make the payment of 10,000 rupees and the balance amount, calculate the balance amount, then make the payment of balance amounts to vendor by issuing shares at par and at a premium. This is the problem. So for solving this problem, first we want to calculate the amount payable to vendor at par or at premium. For calculating the number of shares at par, the equation is the amount payable divided by face value. So 1,05,000 divided by 10 rupee. Then you will get the number of the shares, 10,500 shares. Then pass the journal entry. First, machinery purchased entry, machinery account debtor to vendor's account. Total amount, how much? 1,15,000. Then make the payment to vendor. Vendor's account debtor to cash account 10,000. Then a balance amount to be payable is 1,05,000. So pass the journal entry for issuing shares for making the payment of cost of the machinery. Is vendor's account debtor to share capital. The amount transferred to vendor account equal to number of shares issued into issue price. That is 10,500 into 10 rupees. The amount transferred to share capital equal to number of shares issued into face value or nominal value, 10,500 into 10 rupees. The next we are going to calculate the number of shares issued by the company when shares are issued at premium. The equation is amount payable or due divided by issue price. Here the issue price is premium. The issue price is 10.50, 10 rupees 50 paise. So first calculate the number of shares issued, 1,05,000 divided by 10.50, then you will get 10,000 shares. Then entry vendor's account debtor to share capital to securities premium. The amount transferred to vendor's account equal to number of shares issued, that is 10,000 into 10.50 issue price. The amount transferred to share capital account equal to number of shares issued into nominal value, 10,000 into 10 rupees, 1 lakh rupees. The amount transferred to securities premium account is number of shares issued into premium of 50 paise. These are the important journal entries passed by the company for making the payment to the vendor.